More convertible bond issuers this year are saying no to hedging your bets, so-called cap call transactions, options that automatically sell a stock if the price goes beyond the predetermined price, are often put in place in conjunction with convertible bond deals. The overlay prevents actual dilution to the shareholding base. Even when a share price rises and triggers a conversion of the bonds into equities, only a third of the issuers in 2023 have used the structure versus about 50% over the last 3 years, according to Santosh Srinivasan, head of JP Morgan Chase and Equities, or their equity linked and private capital markets in the Americas. JP Morgan, together with Bank of America Corp and Morgan Stanley, will be the top 3 banks handling the 64 convertible issues so far this year, based on data compiled by Bloomberg. Companies have been more prudent about using hedges, partly because of a shift in issuer type from high growth companies, investment grade utilities, which generally enjoy slower but steady growth. And their main concern isn't share price increases triggering a dilution. Issuers have been more focused on preserving cash and maximizing the coupon saving versus debt this year, Srinivasan said. And while the S&P 500 index had risen almost 20% this year through July before pairing gains, industry participants have said that rally centered on just a handful of large cap stocks, that the cap call premium has long been a gauge of how bullish a convertible bond issuer is about its stock. The share price level at which such auctions are so important is often deemed a reflection of management expectations on the trajectory of its shares. There's a cost to put the options in place, and the higher the premium, the such more it costs. Fitness company Peloton Interactive Incorporated, which benefited from a boom in at-home fitness equipment sales during the pandemic, famously placed 150% capped call premium on its already 65% conversion premium versus a typical 25 to 35% for its $1 billion zero coupon convertible bond in February 2021. Peloton shares have lost 95% since the convertible issue, and the convertible bonds currently trade at around 76 cents on the dollar. Outside of the utility and real estate investment trust sectors, most convertible bond issuers are using cap call transactions, according to Eric Codlin, in America's co-head of strategic equity solutions at Bank of America Corp. When Shockwave Medical Inc. priced its upsized $650 million convertible bond issue on August 10th, it entered into capped call transactions of up to 100% of its share price on the day of issuance. Granite Construction Inc. went even further in its May issue of $325 million worth of 5-year notes, setting it at 125% premium. Shockwave's 4.7% shares have risen about 7% this year, while Granite Construction gained over 16%. Market participants expect the cap call strategy to return as a common feature of convertible bonds as the mix of issuers diversifies beyond investment-grade utilities. There will be more growth issuances going forward in other sectors. Should also take a greater interest in convertibles, including industrials, consumer, and real estate, said Michael Voris, global head of structured equity group at Goldman Sachs Group Inc. Nicholas Gortonzunian, an equity-linked advisor at Hudson West LLC, said his firm is having conversations with industrial and consumer companies about refinancing past term loans or bond offerings. If they refinance in the bond market today, they will likely pay a higher coupon than what they currently are paying, which is dilutive to earnings, he said. So as an alternative, they can tap the convertible market, and issue with coupons of typically under 4%. So long as they're comfortable with the equity option, they're selling. And utilities and financial companies drove over 40% of the $34.8 billion deal flow so far this year, while industrial and consumer issuances made up a combined 8%. The real question is, when does the cost of capital become more expensive in the future? And what to do to mitigate that equity dilution? And should they start to looking at call spreads? We are having those conversations at the moment, said Goldman's Voris.